Also in the very model itself. I mean, WeWork, yes, that was a single stock that had its own problems, and as a single stock, it did have a bearing on the market in general. But now we're looking at a complete change of entire circumstances. We've got an entire investment industry that's looking to away from these kind of growth stocks and being slightly more skeptical about the next couple of years in the environment of rising interest rates and slowing growth. So all those ones that are not even on the books, are they going to deliver on the kind of growth that we were expecting 6 months ago?
See, select few companies will, but the widespread, the large number of massively loss-making companies, when they get valued at multiples of tens of billions of dollars, to us it reminds us of tulips and Ponzi's. So it's very worrisome what was happening. Now we are having some semblance of balance, given that you don't have infinite valuations priced to sales multiples with unprofitable companies. So yeah, this could last for another year, 2 years, 3 years, who knows? This is winter, tough winter for these guys. What we expect SoftBank to do is slow down its private investments and use whatever funding it has to meet its requirements for whenever it needs to invest or do buyback. It's an ongoing $10 billion buyback right now. So to complete that, if it needs to raise funds, whether through selling of Alibaba or whatever stakes it has, we think they will do it. They will survive. But
what do you think?
Stock price, sorry, please go ahead.
I was going to say, what do you think about the stock price in general? Because, it's probably a bit early to suggest that the downside is fully baked in, is it? Do you think we might see further losses and further weakness in the tech market overall and therefore SoftBank in general?
That part is a little tricky to say that we would expect a lot more decline in the tech markets, which to a large extent we have seen very sharp declines, as much as in certain cases, somewhere between 40 to 80% decline in stock prices in the last 3 to 6 months, something that we saw over a 2 to 3 year period after the dot-com bubble bust. So that part I'm not so sure, but quite a few asset prices may never recover. That is definitely the risk. On the SoftBank stock price, it's somewhat embarrassing that we did downgrade the stock same time, March last year, when the stock went past 10,000 yen. But when it fell to 8,000, this is just before the DD listing, we went bullish again. And that was, on hindsight, the wrong time, because actually the DD listing was a trigger when China government went on with the regulatory headwinds. And since then, we have only seen stock price decline. Now we are if we just do the NAV calculations, that obviously implies higher prices for SoftBank. But again, this is probably not a good time to even sell, because a lot of these asset prices are deflated, have seen massive sell-off. At least we want to see a bit of a recovery and then reassess after that. But right now, we will still go for a positive rating, and we have a positive rating on the stock.